Good evening, everyone. Time for another silver update. This is the 30-minute chart of the gold silver overlay chart, and you can see that with the fiscal cliff talks today, we got a pretty good rally out of gold as silver was following and then is kind of lagging behind. Now, silver has been lagging behind here for a while, ever since we had the smackdown and put in kind of this bottom that we're seeing here, around $30 for silver. The price would have been higher if they would have closed it on the ask, but they closed it on the bid. So you can see that silver pretty much didn't do anything, and gold ended up with a nice rally. You can see how extreme that difference is when we go. I did have the yearly change, and silver was around 8 or 9% for the year, which is a very good year to close out. Gold was lower. I think it was around 7%, but those numbers have reset for the year, so I don't have those. You can see here that the price of silver closed on that spot bid of 30.11, and you can see the ask is 30.58. So if they would have closed silver on the ask, then it would have been a little bit higher. Now, of course, if we wouldn't have had the smackdown, and if silver would have closed up in the area it was before that occurred, and we're talking about maybe 35 for silver, if it would have closed up in here, then silver would have been, again, the best asset, the best returning asset. Of course, it wasn't last year because of the huge smackdown, so we got kind of a mirror image smackdown. Again, you can see that lagging. Silver should have closed right in here, but they closed it down there. So not a big deal. Doesn't really matter in the scheme of things. Again, that's the machinations and the manipulations that go on with these people who are more interested in trying to paint the tape than anything else. They did some tape painting with the Dow. If you follow Zero Hedge, you saw on Friday that the futures were down almost 230 points after the market closed. Of course, that's something they love to do, is paint the tape after it closed. The Dow was actually trading all the way down here around 12,700 or 12,800. Of course, they opened it this morning much higher. And again, that's not surprising at all. The people who control these markets, primarily the government, they're interested in perception, painting the tape, and rigging things. Of course, they can only rig things so far, and then they're going to collapse. We're going to get to that when we look at the fiscal cliff. I call it the fiscal clown show, and we'll see that when we look at the latest debate and how they pushed this off until the last minute. And now we found out apparently tonight that the last minute isn't the last minute. So it really is a big clown show, not really that important in the scheme of things. Things will end up where they end up either way. But let's take some questions before we get to the main topic of the night. And the first question is from Mongo9584. It's about the copper ETF. And he says, greetings and happy holidays, Brother John. Now that Canada and the United States have decided not to mint pennies anymore, and JP Morgan has gotten the green light to manipulate copper with the first ever copper ETF, do you think it's time to invest in copper bullion while it is still cheap? Well, that's a good question. Now, there was a very good article on nickels today on the blog. If you didn't see that, head over to the blog and look up nickels. There's a very good article on that. The nickel right now is actually the best money that is out there. I think it costs them about 14 cents to make one, but the nickel is actually worth a nickel. So the nickel is real money, and a lot of people are stacking nickels. A lot of people don't think it's worth it, but the nickel is kind of going through the same thing that the silver went through back in 1964. So you had a lot of forward-seeing people who were stacking the silver coins in circulation. They were culling them out. Of course, that's Gresham's law. They were culling them out, keeping the clad ones in circulation. people that did that ended up being right, and the issue about it being melted down, of course, became a non-issue once it was no longer circulating currency. Then the laws about melting it changed. So we're seeing the same thing with nickels now, and of course pennies. But as far as the copper price goes, you probably want to head over to Kitco, and you've got your base metals here, where you can look at all the stats on those. I like this because it gives you a breakdown. The two I like to look at are going to be the 5-year copper spot, and you can see the 5-year price of copper there. A big drop from 4 down to nearly 1, so almost a 75% drop in the price of copper. And then, of course, a big rally back, and then a failure, and then we're getting very near where we were before it fell. But the other thing I like to really keep an eye on is the inventory stocks, the warehouse stock levels, and you can see that we're definitely not anywhere near a low, and we're actually rising back up in those copper stocks. That tends to indicate a bearish view of the economy. If you remember back during, well, it wasn't a boom, but back during when the economy was still growing, I think it was nickel was the one that came very close to a default, and I don't know if that is still on the charts here. We can see it's probably a little bit before this time period, but the nickel stocks were getting very low. You can see that nickel stocks are high, and the price is just kind of middling. So it just by looking at the stocks, I would have to say that there's nowhere near being a squeeze in any of these metals. Go ahead and look through the charts yourself. I don't know what the meaning is behind JP Morgan trying to get into a copper ETF, but we'll have to wait and see. And next question, and this is from George Silver. Is it time to dump silver? With graphene becoming cheaper, plus being a superior conductor of electricity compared to silver, is it time to dump silver? You know, it's funny, I read George's questions a lot. He seems to be kind of the Pollyanna, sky is falling for silver, coming up with all the reasons. So let's look at one article. You can do the research yourself. This is an article about graphene. It was published in Ars Technica Science Journal in October of this year, and the headline is "The Graphene Age Isn't Quite Here Yet." Now, it goes into the details about graphene and its potential, but you can see that most of the things about graphene, the potentials, are just potential uses, and really not anywhere close to getting that as a reality. You can see when he says here, where's my bendy laptop? And the cost is also very high. So they're waiting for solutions. They're not anywhere near having those solutions. So this is still just speculative. But where's my bendy laptop? Beyond fabrication costs and quality, graphene-based electronics must overcome certain obstacles to be practical. Touch screens, electronic paper, and other display-based media require improvements in the electrical resistance at the junction between graphene and metal electrodes. The authors of the review wrote, they expect this problem to be solved in the next decade. So you can see that graphene is not anywhere near threatening silver, if it ever will be. And again, that's really not the main argument that I would make anyway. If you remember with the Polaroid and the photographic issue, a lot of people said that the demise of traditional photography and the rise of electronic photography, I'll call it, digital photography, that would be the death knell of silver. Of course, nothing could be further from the truth. Actually, the uses in the electronics ended up replacing and surpassing the uses that were photographic, and that also eliminated the recycling because the silver that was used in the photographic was much easier to recycle than that which is now used in the electronics. And of course, with the price being suppressed and being so low, it's just not being recycled. It's being dumped into landfills. So those are the main points, but an even more important point, I think, is that the primary use going forward, I think, with silver, and of course what I'm trying to convince people to do is stacking it, is actually, in my opinion, going to be investment demand. And there just isn't enough silver out there to satisfy investment demand. And I think ultimately it's going to be investment demand which causes the silver rocket to take off when it does, breaking out through this flag and ultimately running towards $50. But let's get to the main news of the night. And of course, that's going to be the fiscal cliff. Now, there's a lot of talk about the fiscal cliff. Apparently, this is related to the national debt, the debt limit, and how they have to cut taxes, or they have to raise taxes and cut spending. The tax cuts are off. So, but I pulled a year of the history of the national debt. You can see here, starting a year ago on the 30th of December, and that's 2011, you can see the national debt, total public debt outstanding was $15.222 trillion. You can see we go all the way down, and we're now at 16.336. So we're talking at least a $1.1 trillion increase in the national debt. The national debt never goes down. It has never gone down. I could pull up every year, even though the report that that it went down under Clinton, it did not go down under Clinton. It has just continuously gone up, and it will continuously go up until the crisis hits, whatever that crisis is. So the talks that we have now are really just a public spectacle that don't mean anything. We already know that the cuts that are on the table, which won't be implemented, are only $100 billion over 10 years, which is laughable considering that we're now spending $3.7 trillion a year in the budget, and we're only bringing in $2.2 trillion roughly in tax revenue. So we have a $1.5 trillion hole in the budget, and they're talking about making $100 billion in spending cuts over the next 10 years, and they don't even have any intention of doing that. So they're going to raise taxes. The only debate is who they're going to raise taxes on, and my prediction is they will not cut anything. And even when they say they're going to cut, they're really talking about cutting the growth that they've already projected. They have no intention whatsoever of making any cuts. They intend to run this train off the tracks. I know I've said that a dozen times. This one will resolve itself the same way that the one in the last debt ceiling debate was resolved, was kicking the can down the road to someone else's administration, so that the fiscal clowns that we have in office right now, hopefully in their minds, will be able to retire. They can hand this terrible bag of garbage off to the next guy. Hopefully it collapses on his watch. So I really don't expect anything to come of this, except that they will kick the can down the road, they will increase spending, they will increase taxes, and they will not cut anything. That's always what they've done. They've never done anything different, and I don't expect them to do anything different this time. Now, what does that mean for the price of silver and gold? I think that that is tremendously bullish. I think that it's my personal opinion. I may be wrong, but it's my personal opinion that this little price bounce here is going to be the bottom. It's going to be the December bottom. You can see the December bottom that we had last year was this spike, and I don't expect a spike down. If we do, that would be a tremendous gift for stackers. You can see we're right in between those 2 points, and I have been expecting a snapback rally starting next year, starting just at the beginning of January. We'll see if we snap back. Of course, all of this is going to be based upon what they decide with these fiscal cliff talks. Now, you can see that with the idea that was at least being discussed, that they were going to have some sort of resolution once that idea took hold. And of course, we got a big rally in gold, we got a big rally in stocks, we got a big rally across the board. You can see that gold is now coming up upon that I've pointed out on the blog. We've got this support point. You can see that it bounced, tested, bounced, and then crashed through that level. That's about the 1685 level on gold. Now that's the former support. That's going to become resistance, and that's going to be the price target that gold is going to try to push through as we move into the new year and get whatever news they're going to give us on this fiscal cliff clown show and kicking the can down the road. Now, just looking at the silver chart, you can see silver seems to be flatlined and not rallying. So something's got to give very soon here. I think it's going to happen in January. Generally, silver and gold trend together. They separate, but then they come back together. And my best guess right now is the resolution is going to be that when silver snaps back, it's going to snap back pretty hard and catch up with gold. We'll wait and see. We're going to see later in this week when we get word on how they're going to kick the can down the road this time. And I have no doubt that they're going to resolve this exactly the way they've resolved it every other time, which is to kick the can down the road to the next guy's watch, and hopefully the collapse happens on his watch. And we'll talk to you next time.